Today in crypto, the price of Bitcoin has absolutely exploded over the last 24 hours. Is the Bitcoin halving hype well and truly here? Are we heading to $10,000 next? Will there be a big dip coming for you to buy after the Bitcoin halving? And just why is the Bitcoin halving such a gosh darn important event for the crypto economy anyway? All of that and much, much more in today's episode. The Crypto Lark. This is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild lands of crypto. And for those of you who are new to crypto and you still need help figuring out all of the basics, like how to mine Bitcoin, how to buy Bitcoin, how to sell Bitcoin, how to store Bitcoin, what are the top resources that you need to know for success? Good news, I have made a beginner's course specifically designed to help you get started investing in Bitcoin with confidence. There is a link down below where you can learn more. So, wow, what a wild day for Bitcoin. A massive 16% price spike, giving us one of those just, oh, so glorious green candles. The thing that gets me most excited about this move is that we have now closed above the 200-day moving average. This is a key level that we have been watching for a while, and seeing that close above it really confirms the bullish sentiment coming back into the market. Also, just for some fun reference, the Dow Jones is still down 15% this year, the S&P 500 is down 10%. Meanwhile, gold is up 12%, and Bitcoin's up around 24% so far this year. Only a third of the way through the year, and Bitcoin is still the best investment of 2020. And the recovery for Bitcoin, it has been absolutely wild. It is up nearly 130% since the lows of March. Let's just take a moment now of silence to pour one out for all those who sold at $3,800 last month. We thank you for your sacrifice. I guess I need to clean that up now. Should have thought that through a little bit more. But anyway, it seems that Bitcoin is working on getting 7 straight weeks of green weekly closes just for fun. You can see on this chart here that the last 2 times we had 7 weeks straight of green candles. And just what happened afterwards? Will history repeat? No one knows, but you can certainly make your own deductions based on the way this is playing out, but it's certainly food for thought. But the question we need to think about is, will Bitcoin manage to break out of this super triangle that's kind of been forming up really for like more than 2 years? The time is quickly approaching for this to end. And of course, there are certainly a few different ways that this whole thing could play out. We could keep coiling up and down until the end of the year before we actually see a big breakout, maybe coming later this year. But I don't think that this option is the most likely option. I think that we're actually going to break this triangle possibly even before the Bitcoin halving happens, if enough hype builds up over the next 2 weeks. But that line of resistance around $9,700 is probably not going to be easy to break, at least not to get a weekly candle closing above that. However, if we do break that line, then the honey badger may well truly be unleashed. And of course, you guys know what happens when the Bitcoin honey badger gets out of its cage. It goes crazy. The Bitcoin halving pre-hype run, it's here, it's happening right now. There was a slight delay thanks to the Mexican beer crisis and the relating economic crisis that came out of that, but we could now indeed be seeing that pre-halving speculation run playing out before our eyes. So enjoy it. It's a great moment in time. Now, the most exciting scenario would be as follows. By the way, on this chart, you'll see at the bright green line, that is the date of the Bitcoin halving. So the halving hype could push us not just to $10,000, but actually even up as high as $11,000 or $12,000 in the next 2 weeks. But do remember that this could be nothing more than a buy the rumor, sell the news kind of event for the Bitcoin halving. But if we do break that resistance line, that does take us over $9,700 and potentially much farther beyond that. But look back to 2016, there was a 30% dip that happened in the weeks following the halving. So if we can indeed climb back to $10,000, then a correction of 30% would actually bring us back down to $7,000. If we can reach $12,000, then a move back to $9,000 is possible. That would be the strongest move I could imagine. We have a nice breakout above that line of resistance, followed by a retest back down of that resistance, flipping the resistance into support. Be awesome. But this halving is not the last halving. Everyone's unique in its own right. The pre-halving price action has actually been very, very dissimilar to the previous halving because of the crisis. So the post-halving dip, it may not play out how many people expect it to. That being said, we cannot ignore the wider economic situation and the possibility that global markets could be pushed much, much, much lower, and that Bitcoin is not necessarily immune to those kind of moves. Goldman Sachs just issued a report calling for another major correction later this year. I mean, it's Goldman Sachs, can't really trust them, but take it for what you will. If that does happen, then there could be some more sweet, sweet Bitcoin dips ahead to buy. So that's definitely a bonus for the ones who want to get more Bitcoin without a doubt. However, you don't need to FOMO and you don't need to buy the dip to be successful at Bitcoin. You can just stack sats and chill. It's the easiest, most stress-free way to do Bitcoin. And a great way to stack some extra sats is with BlockFi. They are offering 6% annually on your Bitcoin and 8.6% annually on your dollars. So you can even set your dollar payouts to be paid out in Bitcoin, which is definitely nice. There's a link down below where you can learn more about BlockFi's services. Now, one of the big reasons why the Bitcoin halving is such an important event is because the Bitcoin inflation rate is dropping from 3.6 down to 1.8%, meaning that the number of Bitcoin that can be sold by miners every single day is dropping from 1,800 all the way down to 900. At the same time that supply decrease is happening on a daily basis, we see demand increasing, as is evidenced by the increase in new addresses for Bitcoin. We've been hitting new all-time highs day after day, particularly for those small holders, which is very exciting. It means more regular people are getting Bitcoin. Those are addresses with 0.1 Bitcoin or 1 Bitcoin or more hitting new all-time highs. Exchanges have also been seeing massive sign-up numbers since the big crash back in March. Volumes on peer-to-peer platforms have been exploding in regions like Chile and Venezuela, which are underserved by traditional exchanges. Grayscale has seen a massive influx of institutional investors for their products. Trading volumes continue to hit just new all-time highs across many of the exchanges. And the halving, it hasn't even happened yet. You need to understand that even if demand stayed exactly the same for Bitcoin, that the price would still see a big increase, because right now there's about $15 million a day in Bitcoin being mined and potentially sold by miners. That selling pressure, it will drop to around $7.5 million a day soon, which is around $250 million a month less selling pressure. Now I know you might say, but Lark, come on, miners hodl their Bitcoin. They would be crazy to sell with all the things that you're talking about in this video coming up, and the price is going to go higher, Bitcoin mining is a cash business primarily. They mine to make cash profits. They invest cash, they sell for cash, they get cash back. At least most of the big boys, that is how they run their businesses. And yes, of course, some of them are building strategic positions in Bitcoin and lending out their Bitcoin and all these different things, but the selling pressure from the miners is real. The majority of Bitcoin is getting sold by the miners. And when the halving event triggers, there will be a big shift in the amount of Bitcoin sold in the markets and the supply and demand structure. The Bitcoin halving, it is a major road marker on the way to new highs. And when Bitcoin does well, the rest of the crypto markets, they also do very well. When we see Bitcoin blasting up to $100,000 and beyond, which is well within the stock to flow model, we'll also see mega moon runs for things like Ethereum. Maybe we're going up to $2,000 or more. Cardano's going back over $1. Tezos could hit 30 bucks a pop. Might sound crazy, but this is the exact kind of irrational exuberance that pushed the prices so sky high back in 2017. The Bitcoin halving in 2016, that was the match that set everything alight. And when that snowball effect started rolling downhill and picking up pace, driving the markets until it exploded in just a glorious crescendo, it was pretty awesome. Anyway, the coming bull run, it will be fundamentally different from the last one and even more powerful, because now we have so many working products put together by really serious teams. It's not just all white papers and dreams anymore. Now we have more interest in building an open public networks from serious companies like Ernst & Young. We have the decentralized finance evolution. There's now lending and borrowing and flash loans and all kinds of stuff. We have thriving marketplaces with strong competition for both spot and futures markets trading. We have a very healthy lending market that's starting to form up with real professional players. And of course, the Bitcoin network, it is stronger than ever before. All of which adds to the narrative that Bitcoin, it's gonna moon super hard, guys. Super hard. It's gonna be awesome. It's gonna be totally awesome. Very excited about this, in case you can't tell. Now, all of this is happening in a perfect storm-like situation for Bitcoin. Look at the global markets. They're on the ropes. Central banks, they're printing trillions of dollars, handing out money to corporations like it's candy. They're out there buying non-investment grade junk bonds. It's insanity. They're bailing out industries, bailing out the oil industry. Just, we'll take it all, we'll buy all the oil. Who cares? Money doesn't mean anything anyway. They're bailing out the Wall Street's overnight lending markets. They're bailing out international forex markets. Almost every major economy is drowning in absolutely unserviceable debt. The situation, it cannot continue like it is. At some point, all of that debt, all that money printing, all that cronyism, all that too big to fail nonsense, those things will come home to roost, and it won't be pretty. And while all that nonsense is happening, here's Bitcoin, man, just chugging along, steady, resilient, the survivor, the savior. If you don't have Bitcoin, you're crazy. I don't even know what to say. It's the biggest risk right now at this stage, not owning Bitcoin. Stack sats and chill. Play the long game. The crypto market, it's going to create absolutely life-changing wealth in the coming years. Don't get shaken out. But hey, those are just my two stories of a dude talking about cryptocurrencies on the internet. Your question for today: are you buying Bitcoin now? Or are you hoping for another epic dip to come in with your chips and scoop that tasty stuff up? Or are you just stacking sats at every possible opportunity and then chilling? Let me know down below in the comment section what you're doing right now. If you're buying, if you're looking for a dip, if you're just stacking and chilling. Love to hear your thoughts on that. And of course, just a daily reminder, you are freaking awesome. So thank you so much for tuning in to today's video. And I hope you're having an excellent day wherever you are, whatever you're doing out there in the wild, wild world. Long live the blockchain. And peace out till next time. Guess I gotta clean this floor up now, don't I?